Well, good morning, Southern Oregon. Alice Lema here with Pete Belcastro with the Real Estate Show, the one and only Southern Oregon information on real estate, all things real estate here in Southern Oregon. Pete Belcastro and I are both brokers at John L. Scott in Southern Oregon, and we're going to chat for a minute about what's been going on this week. Pete, how are you?
Gosh, I'm pretty good. I've been so busy. I'm gone this weekend when we're doing this show. So I'm up in the Willamette Valley, and I'm helping a client, Alice, move. Sold a house up here about a year ago, and we're moving back to the Rogue Valley for a job. And so we're in the process of helping him do that. And we always really look great forward to having people come back to the Valley, who are going to contribute to our community. So I've been busy that way. The biggest thing that happened since last week when we talked was that, sales, everything were going up and up. We were pretty stoked about that. Last week, boy, it kind of went this way across the board in terms of closed sales, pending sales. Everything was down, Alice, from the week before. I don't know if that's a trend, if it's a one-week blip, whatever, but it certainly was a marked difference from what we've been seeing in the last two and a half months in the market.
Well, and the coronavirus has raised havoc on our local businesses, our elderly, and just everybody in general here. So it's going to be going in fits and starts. And that's one reason we have one of our favorite lenders on today, Giles from Mutual of Omaha Mortgage, who's going to be sharing with us kind of what's going on in the lending world and help bring a little bit of predictability, or at least if it's going to be unpredictable, we'll know why. So we're really excited to talk to Giles. But there's going to be fits and starts as the market changes. We got a late start because of the corona, and as you kept saying, it was almost like a winter market, and then it's picked up, and then now it's slowing down a little bit again.
Well, and you expect that in the market, but it's supply and demand. What's interesting about the discussion today with Giles is that interest rates have dropped again since last week, the week before. They're now below that 3% level. So it's easy right now to get somebody ready to go. The problem is, what do you go to? What do you buy? What do you look at? Because inventory is still below 500 in Jackson County residential sales. That's everything. That's a few years ago, we had 1,200. Do you remember, Alice? It was last July when we first noticed. Remember that when we talked about it on our show, was the first time we saw those listings go under 1,000 in Jackson County. Remember that?
Yeah, and we've got a break coming up, so we're going to have to talk more about that here with Giles, Pete Belcastro, Alice Lema on the radio show. Do not touch that dial. Talk to you in a minute. Well, welcome back to the Real Estate Show. I'm Alice Lema here with my broker friend, Pete Belcastro. We both are real estate brokers here in Southern Oregon with John L. Scott. And we're here to chat with Giles today. He's a lender at Mutual of Omaha Mortgage. And he's got an update for us from the Federal Reserve Bank and also what's going on in the world of lending as it pertains to housing. So Guy, tell us what's going on.
Well, it's kind of funny. It's almost just like you guys said in the opening segment. I mean, this virus, it really affects everything. The Fed obviously held rates. They don't really have much to go down if they needed to, but they absolutely didn't raise them up at all this last week. He's just kind of at a spot where he's saying that, we're still not obviously to the levels that we were, but we are seeing a little bit of economic activity out there with job growth and some positive signs, but it's really going to just depend on how this virus acts. So if we get a cure, or we get, I don't know if they've ever cured a virus, but if we start getting, some real help medically for it, I think things are just going to go crazy again. I think last week when you talked about things slowing down a little bit, people got locked down a little bit so we're seeing some of the more cases of this thing, and I think as soon as it opens up, it's just going to be the same thing. Nobody's going to want to do another pandemic. They're not going to want to do another anything in a big city, especially now that they're finding out they can work remotely. And I don't know. I think if it's a little bit of a break right now, which it feels like that for me also, I'm still busy, but not like I was a couple of weeks ago where I feel like I couldn't even keep up. It's going to break loose again any time. So.
Well, I agree with you, and I hope that we don't go through if we go through another lockdown again, if we don't have school, which looks like it may not happen in the fall, Alice, guy, I would say all bets are off then in real estate. I mean, at that point, if September comes around and there's no school, I think we're going to see a big slowdown personally. So I hope it doesn't happen. But yeah, Guy, it's concerning, and you're right. It's affecting everything. Alice, have you seen that in your business much? I mean, you're out there just like I am.
Well, and I work actually all three counties. Klamath County is by special situation, but I work Josephine County and Jackson County vigorously all week long. And right now, I'm still seeing a lot of strength in the market. The prediction I have coming in September through Easter next year is when the commercial market, the commercial real estate, the businesses that cannot pay their leases, and we start seeing some more job losses and people just not being able to keep up with their office space. But I also think it's going to be short and shallow. I don't think the dip is going to be super bad. I don't see us having another crash. And really what we need are people to put their houses on the market, because we have almost a confluence of amazing opportunity here. You can sell your house, you can sell it quickly, you can get the next step done, and it can all happen pretty smoothly, even though it is a pandemic. So I think if we don't have school start, all that's going to happen, this is just my prediction, is that our seasonal market will not be seasonal. I think it'll just even out, and we'll have kind of a steady real estate market all year round, because it will not have school events. It will not have that kind of false deadlines.
Do you remember when you look at the selling curve over the year that starts, and goes up in summer and then falls off as we come down to winter? That's what's going to be interesting, Alice, if that changes in 2020, and how much that curve, which is so predictable, is going to not be that way this year. But, the biggest thing to me is still is the inventory and the lack of where you go. I mean, I've got people who want to sell necessarily, but there's no place to go. And, the inventory is so low that seems to be holding a lot of people back. Guy, do you see that when people come to you for loans? Are you finding that too?
Well, the people, by the time they get to me, they kind of have a little bit of an idea if they can buy a house or not. So I'm not really seeing that. I think people are actually just kind of surprisingly optimistic about buying a house, moving up, especially now that rates are where they are. I mean, it's pretty amazing what more purchasing power you could actually have with the lower rates. I have people that are shocked every day on, when they're actually seeing where we're locking them in. Yeah. And, I'm still having some people pull cash out, believe it or not. And
really,
well, some people had taken second mortgages in the past, and now they're, just kind of consolidating that because rates are so low. Why have a second mortgage at 5-6%, when you can just get the thing done now? So I don't think they're pulling it out to be crazy, or at least that's not the people that are contacting me. But I still stand by, even if this thing keeps on going with the virus, our little market here should be pretty good, because like you said, there's only a finite amount of houses, but people are coming. I mean, there's nobody wants to pay $4,000 a month for a condo in San Francisco if now they can work remote and they can be wherever they want and get out and enjoy something, in the evenings.
Well, the biggest thing to me that the low interest rates have done is they've allowed the buyers to buy more property, right? That's what we're seeing. Mm-hmm. And the statistics bear that out. Alice, last week, there were only 58, by the way, closed sales in Jackson County last week, down from 97 the week before. So they went down by half. But again, 36 of those 58 sales, Alice, Guy, were above $350,000, which continues that trend that we've been seeing, that people are buying more of upper end properties, that 375, 400, 425. Those are what's going out the door right now really fast.
Yeah, and a lot of this is people coming from other places, and they not only have more buying power because they have higher income, but they're purchasing in groups, is what I'm seeing. So I'm seeing Gen X purchasing with their elders. I'm seeing millennials purchase with their Gen X or their grandparents, and so they're buying these essentially family compounds is what they're trying to do, and they want workspace. And I'm curious, Guy, if you're seeing that as well.
Well, yeah, there's been quite a few people trying to get in with their family, and it just makes sense. At some point in life, you just realize that it is short, and you want to be around the people that you love. So I'm having people come up here and people moving, that are already living here, and then their family moves. And yeah, you're right, they want a house that can accommodate all of them, because why stick somebody in a home or someplace if at some point when they can't be independent, if you can sit there and take care of them yourself as a family. I am seeing that quite a bit now. So,
but also part of the demand for our housing that was unexpected is the folks that were securely in assisted living, the elders, are moving out. And some of them are moving out because they decided to, and some of them are moving out because their family decided they were moving out, and they're buying bigger properties, and they're going to be the caretakers till the end. And that was not predicted. So we have extra stress on our supply because of that buyer pool, in my opinion.
But they're also moving into those places. I've got clients moving into independent living, downsizing their homes right now as well. So it goes back and forth, doesn't it? I mean, we're seeing a little of everything taking place in the market, which I think is really, as Guy says, I think that's pretty healthy. I just don't know.
Some that I kind of thought about a little while back, like you said earlier about the commercial, when some of the commercial people can't make their payments, and then they realize also that, hey, we can work everybody from home, so we don't necessarily need that brick and mortar building for that. What are the chances of moving some of that stuff into mutual, or not mutual, but multifamily housing, and retrofitting some of that to where you can, solve a couple of the problems?
And that is partly why the fourplexes, fiveplexes, sixplexes, duplexes, they have extra buyers that we normally don't have. It's not investors anymore. In fact, investors are now having to compete with groups of families.
Yeah, and you can get, even though it's a multi-unit property, if you're going to live there, you can still get the owner-occupied pricing on the thing.
Exactly.
It's not a bad deal, but I still don't know why they don't somehow convert some of these businesses that are, East Jackson Street, things like that, that used to be houses 100 years ago, that have turned into businesses, move those back in.
So that's a zoning thing, right?
Okay, yes, but I've got one for you both. Do you remember where the old Conger Morris funeral home, that big the chapel building downtown courthouse, that was sold by St. Mark's Church, which bought it from them. That is now being converted all into apartments right downtown. And you're absolutely right. That's a great use of old buildings to take them and make them multifamilies like that, for relatively cost, because there's help to get them that way.
Right. Otherwise, you just have a bunch of things sitting around. Alice, why don't you take care of that this week? If you get all the zoning stuff fixed.
All over it. That's what I do. Just talk to people who had no intention of selling, and then next week they're on the market.
Okay, and remember one other thing. Remember, the rules have changed. We're talking about multifamilies and compounds, Alice. The rules have changed. It's easier now to add an additional dwelling unit onto your property now, over a garage or wherever you're doing, than it ever has been in our state. So keep that in mind as you develop your property, because those are really popular. They're going to be huge, and people will pay to have, as you say, more of a family compound place to live.
Don't they have to get about half the square footage of the regular house? Sorry, I didn't mean to talk.
It can only go up to 900 feet, but it's up to each municipality. And also, I just want to warn people that it's not as easy as it sounds. It's definitely worth doing, but the municipalities extort an amazing amount of money for the right to do this, and they will frequently insist that the homeowner pay for elaborate sidewalks, gutters, street lights. There's all kinds of things that are involved in this. So but it's still worth doing, in my opinion.
in certain locations, maybe better than others too. Yeah. Hey, do you know what the biggest thing right now is? If you own a short-term vacation rental, try to book one. You can't. They are absolutely booking up around, and I've never quite seen the people who I know who have them are just thrilled because there's so much activity right now with short-term rentals all over our region. They're just booking
And
out.
why do you think that is? Why do you think that is?
People are not going to large crowds when they're gathering on vacations. They're going to smaller places. They can be social distance, and they want to be private somewhere to go. They're flocking here. You try to book one, Alice, on the coast. You can't. Even around
Yeah,
the
I also think they're scoping out new areas so that they can move their family. And so you've got two different pools of visitors trying to compete for those Airbnbs.
I was actually going to do that with the house I have over on the river. And then I got a phone call from some people moving here, and it's exactly that. They asked if they could rent it for a couple of months while they figured out exactly where they want to be in the area. So I think you guys are right about that.
Absolutely.
Well, and who would have thought, right?
Yeah. It's still a great investment.
Yeah, so we've got a break coming up. We're here with Guy Giles of Mutual of Omaha Mortgage, Pete Belcastro and I, brokers John L. Scott, Southern Oregon. We're here on the weekly radio show talking about Southern Oregon real estate. Do not touch that dial. This is the best information you're going to get all week. We'll be right back after this commercial break. Well, welcome back, real estate fans, to the radio show talking about real estate here in Southern Oregon. I'm Alice Lema here with Pete Belcastro. We're both brokers with John L. Scott in Southern Oregon. You can also find us on YouTube. We've got 11 years of amazing content talking about real estate in Southern Oregon, and that's the realestateshoworegon.com. Today, we're getting quite an education from Guy Giles, Mutual of Omaha Mortgage, and he's going to lead us in talking about self-employment, I believe, and what that has to do with getting a mortgage right now.
Yeah, the big thing is the investors, the government-sponsored entities, Fannie Mae, Freddie Mac. They really want to make sure that if you're self-employed, that you haven't lost a lot of income through this. Historically, we've just gone back and looked at a couple years' tax returns, and then looked at a profit and loss from this year, not to make your income go up or down, but just to make sure that there wasn't, a trending, that is trending down for the current year. Obviously, we're starting to get a little bit later in the year, so the underwriters are looking at the profit and losses a little bit closer. But one of the changes that has happened is they still want the profit and loss, but now they're asking for bank statements to back that profit and loss up, just to show, like, say you're a real estate agent and things slowed down for a couple of months. You might want to wait another month or so, which is okay because rates are, for the foreseeable future, going to be really good. But they'll want to make sure that those bank statements kind of coincide with the profit and loss that you're getting. And if they don't, then they're going to ask for an audited one from a CPA. So it's a little bit of an extra step. It's not necessarily a bad thing. I have some folks moving to town from the Bay Area that have a fire extinguisher business, and all of their contracts were the same. Their income didn't go down. So it's really not a problem if you haven't ran into any issues. But if you have, you'll definitely want to maybe revisit that with your lender and, just make sure that you're still good to go.
So how does that work with folks that are incorporated, like a subchapter S? So they're not 1099s necessarily, but they're going through a corporation that they own.
Yeah, if you're getting paid a salary, then you're probably okay. If it's just, hey, my salary hasn't gone down, even if you're kind of paying yourself and doing it that way. But again, if you own over 25% of the business, they're going to scrutinize that and just make sure that it wasn't negatively impacted over this. So time.
Maybe allow yourself more time, even if you are an incorporated person, and not a straight 1099. Give yourself more time to get pre-approved. Is that what you're saying?
I would definitely suggest people that are self-employed getting a full credit pre-approval beforehand. It's a little bit more difficult to get right now just because everybody's so busy. I mean, we're over probably 100% more than anybody thought that the volume would be right now as lenders. So
how does that work? Oh, I'm sorry. How does that work with professional investors if they can show a steady stream of profitable apartment buildings or something.
Oh, you should be fine to go if all of a sudden your bank statements say you were pulling in $20,000 a month from them, and then all of a sudden, with a lot of what the governor or different people have said about you cannot get evicted. If some of your people quit paying that, that would show directly in those bank statements, and you'd be able to determine whether or not you were impacted.
But if you belong to the local Southern Oregon Rental Owners Association and go to their classes, you would know how to write your leases so that you were less susceptible to having tenants that did not pay their rent.
Hey, that is good advice. So I think you guys should probably put that on your link, because that would be good information for people.
Yeah, it's very interesting because a lot of us are not experiencing any problems with our tenants paying rent, but it's because we've been educated by our local landlord association.
That is actually really cool. I did see a couple of other notes, this week, as far as one of the things that the Federal Housing Finance Agency, or the FHFA, have put out, that 2021, they really want about 24% of the lending to be low to moderate income. So, stay tuned after the election. Obviously, it's going to depend on, a little bit about the leadership, but it is really a goal of theirs to be able to get some people into housing. So there might be some new programs coming down the road, or them expanding the low to moderate income for the low down payment, programs that we have. It will be a focus definitely this next year to get some more people in a house. Hopefully there's a house for them to get into. That's obviously another thing. This is completely beside the point. They haven't really loosened up on the Chenoa Fund or the Lakeviews that are kind of the 100% down, the 100% regular, private sector loans. You still have FHA and VA and, the regular 3% down. But I guess we'll just see. I mean, this virus is really going to determine the direction that we're going. But another thing that I looked at was last year, 12% of the people said that they wanted to buy a new house this year. That's actually just some new figures as of Wednesday. That was only 11% right now. So really only a 1% change in people that were planning on doing something this year from a year ago. And that was all pre-pandemic. So I think people are still wanting to go.
I mean, this guy, Alice, say I've got the buyer, okay, and I've got some equity in my house, and I want to buy something, okay, and I don't want to put my house as a contingent sale before I buy that one, because we just see that, if you're a seller and you've got multiple offers and one is contingent on some other place selling and one is not, you're probably going to take the one that's not contingent. So what can you do for a buyer who's in that situation? Is there a way, a loan that they can do to where they can buy without having to put a contingent offer in their other sale of the property?
Yeah. There still is the cross collateralization loan. I haven't had one come up in probably about 8 months. So I need to go back and just look and see if anything's changed on those. They do have issues with those crossing against state lines. So if you have a house in California that's got a ton of equity, they never allow it to go across state lines, just for title issue reasons. They can't intermingle like that. But there are a couple of programs you can get credit if your house, is on the market with Fannie Mae. I think what we should do is next time we come back, let me look and see what guidelines have changed, because I really have not had that come up in a couple of months, and I don't want to. But anyway, we have done quite a few of them that way, and
well, for some people, it's a really good deal, because I don't want to put contingent offers. Alice, you don't like putting contingent offers in either, do you? I mean, I don't.
I do so many of them because that's just a situation that a lot of folks find themselves in. I always recommend to get that kind of bridge loan that Guy's talking about, but not everybody can qualify for that. So you just have to find other carrots to dangle, basically, so that your clients get, win the bid. And you have to do it twice, because if you have a house to sell, then you have to, deal with that. You have to find buyers that are willing to put up with that. And then you also have it on the other side where you're buying a house and you have to convince that seller to accept your offer. So I just had somebody, because we have a lot of people that are not just moving from other places to here. We have people that live here that are moving to lower cost areas. So I have a lot of people leaving Ashland, leaving Jacksonville, leaving Central Point, and they're going to the coast, they're going to Klamath, they're going to Merlin, places like that. And they're having to overpay for those houses because they're in a contingency. That's kind of one of the side effects. You just have to figure out what poison pill you're going to swallow in that situation.
Mm-hmm. Well, I don't see that really changing much because of the inventory situation. I mean, we have our month supply of inventory. Look, we're here at the end. It's August 1st now, this date. So we'll have the July stats out next week so we can look at them again. But geez, if the inventory is still low, we're going to see more multiple offers and more contingent buying. And so I think buyers and sellers just need to be aware of the situation there and make your offer as strong as you can. The biggest thing is if you're going to make a contingent offer, isn't this true? Your property needs to be in contract before you even make an offer on something else. Would you say that's true or not true?
Yes, or at least you should be in the process of having multiple offers submitted on your property. That's a pretty strong place. Like if you're not in contract, but you have 4 offers that you're looking at in the next 24 hours, that's a great time to go and start writing an offer on your new purchase property.
Mm-hmm. And what about pricing, Guy, as well? Are we seeing sellers getting almost 100% of what their list price is? Not quite, but pretty close, right?
Yeah, when we're making offers, obviously everybody comes back in and says, hey, they just reduced this one $10,000. Maybe I could offer $50,000 less. You try to coach them a little bit that person in their mind, they just lost whatever that reduction was. So they don't really, it doesn't mean they're that desperate. That just means maybe they were a little overpriced to begin with. But I think that's why it's just good to have a good agent. I've seen people try to do this thing on their own and go make a bunch of different offers to different people over and over again. But if you have that insight from a good agent, they'll know, he or she'll know, how long a thing's been on the market, what they paid for that house, a little bit more about the whole situation. And I'm not seeing low appraisals. I'm seeing, people are still paying for closing costs a lot, but I'm also seeing a lot of offers where they're not asking for it because they're afraid they're not going to get the house at this point. And if they don't have to, they don't. So
yeah, that's an excellent strategy, is to please don't ask the seller for your closing costs. Just pay them yourself. Get them from Aunt Betty, get them from Uncle Fred, but don't ask the seller to pay them.
Gift funds are still perfectly acceptable. Just keep in mind, wire those straight to the title company so you don't have to have grandma give you 2 months of her bank statement to kind of source the funds. So there's a few tricks that we have there too that'll save you some time and energy.
Yeah, and the reason that's such an important thing on those closing costs is that, again, if you got multiple offers and your offer is for the seller to pay the closing costs and the other guy is for they're paying their own, you can see what you're going to get there as well. So there's a lot of strategies out there, and you got to be able to adapt, don't you think, and change, and because the market, look at this market. We watch it every week. It changes literally every week. There's no question about that, and so we got to be prepared for it as best we can.
And that's part of the goal of this show. We're here to help people be educated, stay on top of what's happening in the market real time. That's why we have smart people like Guy Giles from Mutual of Omaha Mortgage here to help us get ourselves through this weird pandemic time and still buy and sell the properties that we need to so that we can get on with the next step of our life. So we will be back after a quick commercial break. Please do not touch that dial. This is the best hour you're going to spend this weekend getting educated about how you can make your life better by buying and selling houses here in Southern Oregon. So if you don't have an agent, please call one. We'd love for you to call us. You could also call Guy Giles, Mutual Omaha Mortgage, if you need some help with lending. But mostly we want you to be educated and we want you to call somebody. So we'll talk to you in just a couple of minutes. Alice Lema, Pete Belcastro, and Guy Giles will be right back after these messages. Well, welcome back, Southern Oregon, to the Real Estate Show. I'm here with Pete Belcastro. I'm Alice Lema. We're both brokers at John L. Scott, Southern Oregon, and we're here having a really interesting conversation with Guy Giles of Mutual Omaha Lending, and we're talking about how the corona has affected our market and our prices. And right now, here we are in late July, early August, and the market's a little bit slow this last week, isn't it, Pete?
Well, it dropped, pending sales, 97 the week before, 58 last week in Jackson County. Josephine and Klamath County almost went off the cliff. They dropped by from 35 the week before to 14. Only 12 closings last week in Klamath, 14 in Josephine County. But the median price, Alice, continues to kind of go like this. Median price in Jackson County was $423,000 last week, which is way above the national average. And even in Josephine County, it was $340,000. So again, but it's slowed. There's no question about that. So what that means, I'm not sure. We'll find out more this week, I think, as we take another look. Is it because inventory is low? That's probably the biggest challenge. It's certainly not because interest rates are low. So Guy Giles, let me ask you, here we are, August the 1st. What kind of rate are you giving right now to people coming in to see you?
I just pulled one up. Somebody with a decent down payment and good credit on a purchase right now, without really paying any points. I'm gonna have to quote an APR to do this thing legally here, so I'll throw on my glasses. 2.75, 2.78 APR. So really, I'm kind of at par at 2.75 on a purchase right now.
God, that's shocking. That's shocking.
It's crazy, and we have really good rates. Veterans, we don't charge any fees for them. But if I just ran some quick numbers at the break here, and a $300,000 loan, historically, a 6% rate or under has been a good rate. Obviously, the last few years, that's kind of out the window. But on a $300,000 loan, that payment will be about $1,798, just not taxes and insurance or anything. But at 2.75, that's $1,224. So wow. Just the difference in rates, and every other day they're up or down a little bit. One thing that would change this thing immediately would be a vaccine. I don't think rates would go through the roof, but it wouldn't take long for them to get back to maybe 2018, 2019 rates, which are a little bit higher, but still really good. But if you look over the life of a loan, $570 a month, the difference in that rate on a $300,000 loan, that's $200,000 in interest that you'd save with the rates where they are right now. Not to mention,
and this is why I think families, we're a predominantly older population in Southern Oregon. I think that's going to change because the younger people, the tech workers, the remote tech workers are coming with their families. But we're predominantly older, over 55 population, and I think this trend that we're seeing, this kind of organic movement for people to start living together, in part is because of the low interest rates, that as a family they can pull this off right now, and they don't have to be alone and worried about what's going to happen in the future.
It's a good
So
point.
I'm curious. I'm sorry. I'm curious. No. So do you have a non-owner occupied rental? Like if somebody wants to, because we have people who want to buy, like you said, multifamily apartments for their relatives, but they're not going to live there.
Yeah, we do. I mean, the best way to do something like that would be, if it's for a relative, to look at it like a non-owner occupying co-borrower and let that relative qualify for what they can, and then you step in and do the difference.
I didn't know you could do that. That's interesting.
Yeah, it's actually a really good way. The thing is with investment properties right now is investors are requiring a little bit of skin in the game. So even if you have a down payment, it feels, the last couple that I've priced out, like they still want to charge points no matter what. Just maybe a little bit of a holdover from the crash after 2008, where they thought if anything goes sideways, obviously you need a place to live, so that's going to be the last place you're going to give up. But a rental would be something that you could. But the funny part is, even though I'm talking about these things, rates on a non-owner occupied are probably a lot lower than they were on an occupied, a couple of years ago. So they're still attractive. I tried to just change this thing over. If you were going to buy an investment, just basically the same thing, good down payment, decent credit. Takes it a second to think here, but points, I guess would be the difference.
Let me ask you this, guy. Since so many people are refinancing right now, also, should they, if I come to you to refinance, can I expect that same 2.75% rate, or is refinancing going to be a little bit higher than if I'm doing?
That is a really good point. Yeah, yes, the refinance rates are a little bit higher. If you're going to pull any cash out, that's definitely going to be higher on that. So yeah, there is a distinction between what are called, well, purchase money, so buying a house, or rate and term refinances when you're not pulling any money out of the house. I mean, you can get your closing costs out in no more than $2,000 cash. Right. But then the cash out refinances are a third different bucket that you're putting everything in. I guess the fourth one would be investment.
So there's three different, also refinancing is three different kind of rates there, you say.
Yeah, okay. and then you factor in loan to value, you factor in credit score, you factor in all the other things that have to do with it. You can definitely get a wide range of rates as far as that goes. And it's day to day right now too. You know, I have a couple different people that I'm looking at, that I'm just watching, and then one day all of a sudden you'll get a nice dip and I'll lock a couple $1 million worth of people, and then I'll sit around and, you know, watch them again for a while. So I did just kind of price this thing out, and you're still in the mid threes without really paying any points with a good down payment on an investment property. So rates are still good on those. I mean, when we're complaining, that's a great rate.
Alice, do you think that's a good rate then for investing property for investors?
Oh, absolutely. Absolutely. And again, it's just having the inventory. I really think that that's the slowdown. That's what's underneath the slowdown, is the inventory. And I just cannot encourage people enough. If you have ever thought about moving, buying something bigger, buying something smaller, buying a second home, getting an investment, really, this is such an amazing time. The people that are on the market are fairly easy to deal with. It's a straightforward time. We don't have a lot of distressed situation. You know, if we do end up this winter with a handful of short sales, those are not the good deals people think they're going to be, because they're so hard to close, and sometimes they don't close. So I think we've got a nice batch of people on the market right now. We just need more of them in every price range, not just the under 300 price range, but in every price range.
Yeah. Well, this last week, you know, we were talking about the luxury market, how it had changed. And last week, the week before, there were like 6 luxury homes sold. Last week, there was just 1. So, you know, even that changed as well. So you're right, the market's changing. And that's why, as you say, each week we get here to try to get people to be aware of what's going on. It's the biggest investment you're ever going to make. And what a great way to create wealth for you and your family. So, by God, it's so crazy to say it's a great time to sell and a great time to buy, all in the same sentence. Amazing.
Yeah, because that just never happens. And, you know, if you want somebody to check with lending-wise, get a hold of Guy Giles at Mutual of Omaha Mortgage Guy. What's your number? How do people find you?
They can either Google me or call me at 541-944-6987. And I do have a new loan officer here that is fluent in Spanish. She's been in the business for a long time. So maybe next time we can introduce her to you.
Oh, that's great. So bilingual services. That's wonderful. Congratulations. That's a big step.
Oh, she's going to be good.
Well, that's about it for this weekend. We've got a broadcast repeating tomorrow at 6 p.m. Please tune in and have a beautiful Southern Oregon weekend. It's Alice Lema, Pete Belcastro, and Guy Giles saying, make it a great day. We'll talk to you next Saturday. Bye now.
Okay, thank you.